Within a few seconds, we will be starting the class. Hi friends, within few seconds, we'll be starting the class. So,
पॅन कार्ड डेट ऑफ बर्थ आणि सगळे फोन करून मागवते
just wait for a few seconds. We'll be starting the class soon. We are all set to start the class. Sai Kiran have joined in Zoom. Hello. Am I audible to all of you?
Yes, sir.
Okay. So in few seconds, yes, audible. Yes, I can check. Okay, so in today's class, we will be discussing about few MCQs that is related to risk management. And this is indirectly going to help people, those who are preparing for other exams in professional knowledge segment. So you can check these questions, the depth of the questions, and you can find the difference between others, those who are making questions online for risk management, for credit managers post, etc. So I look forward for your participation. Those who are watching us on YouTube are requested to kindly subscribe our channel. Those who have not subscribed us yet. So I can only take charts from people, those who are watching us in YouTube, and I can discuss with all our friends, enrolled students, those who are with us in Zoom live. Okay. So okay, so let's begin the class. We'll not waste much of our time. We will directly discuss questions that is related to risk management. So how many of you are risk management students here? How many risk management students here? May I kindly confirm? You can both chat in YouTube. I'm looking forward for your comments in YouTube. Those who are watching, may I know who are they watching us on YouTube? Any of Before that, let me start the session. We'll directly go to the quiz. Names, please. People who, yes, Mahesh. Yes, Mahesh is our enrolled student, but unfortunately, his Zoom application not working. Okay. Chandan, yes, Chandan, thank you for joining. Okay. So wait a while when I download our quiz. Just a minute. Okay. No, it is not. Just a second. I am I load the quiz in between. One second. Let me load the quiz. Okay, here it is. Yes, Puneet Kumar Mahanti. Okay, great. This is the risk management quiz. Let me start this. I think hope your preparation is at right pace. So this is the first question. We will be discussing about camels. What does C stands for? Is this a right question? We will be bringing you questions nowadays that are being asked in bank exams, in lateral entry exams. No simple questions, no tough questions, questions that are going to be asked. We will be discussing it directly. Okay, so let's discuss. What does C stands for in camel? What does C stands for in camel? Any answer? Capital adequacy? Yes. Many of you saying right answer. Yes, capital adequacy is the right answer. So can anyone tell what other letters in camels refer? What other letters do others other letters stand for? What does A stand for? Is it capital adequacy CA, or A is for something else? Can anyone tell me? Can anyone tell me what A stands for here? Asset quality, Sutha. Yes, thank you. Your answer is right, correct. Okay. So C stands for capital adequacy, asset quality, M stands for management, and E for earnings, L for liquidity, S for sensitivity. What is sensitivity? Sensitivity means risk, but Camel is going to be outdated very soon, and there are 16 more banks, those who are not rated in Camel point of view. What is that Camel? Camel is a risk management parameter. Okay. Okay, this is a simple question. Second one, yes, E for earnings. Yes, Mahesh. Okay, so pillar one of Basel 3 covers mainly three types of risk. Pillar one of Basel 3 covers basically three types of risk. So, which one of among them is not one of them? Anil says D. Yes, Anil, you are right. Anil says D, liquidity risk. Is there anyone having any different answer from this? Market risk, credit risk, operational risk. Whether the liquidity risk is covered under Basel 3 or not. Can anyone tell me? Okay, yes, Chandan says D in YouTube. Okay, I'm watching both the comments today. Those who have not subscribed us, kindly do subscribe. You can join the full course here. This is the first question. This is the first set of quiz that we have made live in YouTube. The rest will be available in our dedicated app. So you people can join us there. We are improving the quality, the experience in app day by day. Okay. So, okay. So can anyone tell me that is liquidity risk covered under Basel 3 or not? Whether the liquidity risk is covered under Basel 3 or not? Can anyone tell me? May I get an answer? Yes, you say yes. Okay. So when this liquidity risk was covered under Basel 3, was it initially there? Was it initially there in Basel 3 when after 2008 it has been started implementing the Basel 3 norm? Yes, by liquidity coverage ratio. Yes, this after 2013, this liquidity coverage ratio, NSFR, etc., played a very vital role. Okay, so the Basel 3, what is nowadays implemented, is the second version of Basel 3. The first version of Basel 3 was felt that not that much important and not that much vital for stress management. Then this liquidity risk played a very vital role. post 2013 records. Okay, so this is it. So let's move to the next question. Okay. So question 3, the primary responsibility of understanding the risk run by the bank and ensuring that the risks are appropriately managed, and it should clearly be vested with the MD CEO of the bank, board of directors, chief compliance officer, internal ombudsman. See, nowadays such type of questions are being asked. So this is the difference between others unexperienced candidates, those who are. Anil says C. Wait a while, let others also respond. CCO, yes, I have taken a complete class on Chief Compliance Officer. This is very important nowadays, and especially risk manager people has to deal with this Chief Compliance Officer. See, the level of question that we are preparing here is bit different than any other institute or any other YouTuber, anyone who is teaching, because they lack the required experience. Okay, so we seek your support to grow in terms of our reach. Okay, so that I could bring more effective quiz, MCQs, etc. for you. Okay, so some of you have said that this is Chief Compliance Officer, though I have given more stress on Chief Compliance Officer than Banking Ombudsman in few last classes. But the answer here is Board of Directors, right? The answer is Board of Directors. You not only need to read concepts, you have to understand the phenomena behind everything. Okay, so nowadays risk has given much weightage in banks. So board of directors will now be responsible for managing risks. Okay, so that's why here the right answer is option number B, board of directors. Are you getting it? The primary responsibility of the bank of understanding the risks run by the bank and ensuring that the risks are appropriately managed, it should be clearly vested with the board of directors, right? So those who are watching us and not subscribed, kindly do so. A prerequisite for establishment of an effective risk management system is the existence of a robust MIS, whistleblower policy, corporate governance policy, core banking system. Nagarjan was very fast to answer. He has just answered MIS. Okay, this is the way our students are now prepared for any assignment. I want the enrolled students to lead the race. Anil Misra, yes, A, option number A. Okay, okay. So anyone from YouTube? Chandan says it's option number B in YouTube. Okay. Can I get any other answer? Binay Taylor says it is option number C. Okay. Okay. No, it is MIS. Okay. Why MIS is important? To effectively manage the risk. Okay. Rochak Mehratra says A. Great. Great. Those who have answered MIS. Great. This is the right answer, and you are on a very right track in preparing for risk management exam. Great. So why MIS? Why MIS is something that is prerequisite to establish an effective tool of risk management. Can some use what I have told in my last classes? Yeah, past data is necessary to evaluate risk. Nagarjan, you are very much right. See, you are preparing for both written and interview, and in interview they are going to eliminate you. They will be vested with the power of elimination. If they select you, then you are through. If they find you not suitable enough for the risk management post, they may eliminate you simply. And to crack any bank interview in this segment, in this level, you need to have a clear understanding of concepts. They will definitely, if they will ask you such questions in interview, they will definitely going to ask why you feel MIS is important. Okay, what MIS makes? Okay, MIS makes you, gives you power to analyze the data of bank in a in a nutshell. Am I right? In a nutshell, you are given with the data and you can find out where it is not doing well. Okay, if you have much more NPA coming from a the special segment, if your home loan portfolio in a certain area not doing well, then you find something fishy going on in this area, or some credit decisions are not going well in this area. So you could have a greater understanding and a simpler understanding when you have a clear complete MIS in front of you. Am I right? Am I right? Am I right? Can I move to the next question? Yes, Abhinav Kumar, you said D, core banking system. Yes, core banking system is not the right answer here. Okay, Nagarjan, thank you. Yes, yes, okay. So the Asset Liability Management Committee, which is popularly known as ALCO committee, deal with different type of risk. Okay, they deal with which type of risk? That is not different type of risk. Um, I kindly excuse me for my mistakes. SBI CBO written exam or interview. This is not the right question at this right time. We were discussing. I have already told it will be done after SBI's JA exam. Okay, and you should remain prepared. I want you to teach here. I don't want you to leak some news. I'm not working at a news channel. I'm a banker. I'm an experienced banker, and I am here to give some knowledge and gain some knowledge. So read now. Whenever they will decide, they will give you the notification, but they are going to give you an examination. I have always told you to remain prepared for examination. Okay. So the Asset Liabilities Management Committee, many of you are saying option number B, market risk. Anyone from our enrolled batch or from YouTube, any other answer? Liquidity risk actually. Yes, when I am not mentioned the liquidity risk here, you have to choose one of them. Yes, yes, liquidity risk, but I have not mentioned liquidity risk here deliberately. So ALCO committee decides on one of these risks. There is the risk mentioned. You have to answer the right question. Like if it would have been liquidity risk, it would have been an easy question, right? It would have been an easy question. I want your understanding. I want you to have a greater understanding. Rohit says option number A. Rohit says option number A, credit risk. Any other answer from anyone else? Nagarjan, D, default risk. No, no. The right answer is option number B, market risk. Abhinav was very much right. No, not credit risk. Credit risk is sometimes both for credit risk and market risk there is one committee, but normally if there are two, bank has enough resources and bank has two different committees. So one committee, that is asset liability committee, that works more on market risk. Okay, okay, and why market risk? What are the risks that are there in market risk? Interest rate risk, forex risk, etc. Okay, we have a market risk class scheduled, but many of you have demanded me to have a quiz session both for specialist segments like credit management and risk management and for professional knowledge. And here these questions will be helping you both deeply for the risk management students and partly with the SBI CBO and credit people, those who are preparing for professional knowledge. Okay, in such a way these questions are being arranged, right? So market risk. So let's move to the next question. Which committee oversees the credit or counterparty risk and country risk? Which committee oversees? In ALCO committee, we have discussed about market risk. ALCO committee discusses more about market risk, responsible for market risk. containment of market risk. But yes, Nagarjan say credit policy committee. Whether there is such a committee available or not. Can you explain how market risk? See what happens with in ALCO committee. What is the ALCO committee? No, what ALCO committee does? It deals with asset liabilities management. That is to be checked. Asset liability mismatch is to be checked. Okay. So how could be there is a how could there is a mismatch? How could there be a fluctuation if the interest rate fluctuates, forex rates fluctuates, country risk fluctuate, commodity risk fluctuate? So out of these four risks which I have mentioned here, liquidity risk is definitely ALCO committee is going to deal with, but apart from that, market risk is a part. Market risk in this four concept, market risk is one of the risks that is discussed in an inside ALCO committee. Okay, so can someone tell me what are there inside market risk? What are the components of market risk? Can anyone tell me? And then you will get the answer. Yes, interest rate risk, that is ALCO committee's responsibility. Okay, equity, yes. Inflation risk, yes. Inflation risk is not a broad type of risk. That is equity price risk, foreign exchange risk, commodity price risk. And ALCO committee is there to set up, yes. ALCO committee decides what rate they are going to offer in FD, what rate they are going to offer in savings account, what rate they are going to charge in their loan portfolios. Okay, so that's why among that four risk, market risk is suitable one, which which is the responsibility of, yes, yes, foreign exchange risk, etc. Mahesh, have you got your answer? Mahesh, have you got your answer? Have you got your answer? Okay, so let's move to the next question. I was discussing with you, yes, commodity risk, etc. Which committee oversees the credit or counterparty risk or country risk? Can anyone tell me the answer to the question number 6? Can anyone tell me the answer to question number 6? See, we are here not to discuss only the questions, the concepts related to it. And this is the way of teaching. Because many of you have suggested us to have MCQs, to run MCQs. And apart from MCQs, we will be discussing concepts. Yes, Ragini, your answer is option number D, Banks Committee on Risk Management. Okay. Yes, Mahesh. Equity price risk. Okay. So the right answer is Credit Policy Committee. Okay. Sometimes both the ALCO committee and Credit Policy Committee is one for the banks. If they have separate committees, then Credit Policy Committee will be looking into the credit risk or the counterparty risk, whereas the ALCO committee will be responsible for managing market risk, liquidity risk, etc. Are you getting the right answer? Is this type of questions necessary for your exam preparation? Yes, you have said option number C for the previous question or this question. Transaction risk, default risk, and portfolio risk are part of. Okay, credit risk. Okay, okay. You are saying the answer to the credit risk. I think many of you have now a clear idea about risks in bank. So I believe that yes, Ragini, you say the option number C. Okay, great. You are in a right track. The credit risk is the right answer. Mahesh, you are wrong this time. This is not D. Manohar Ankam, your answer C is the right answer. Yes, it's C. C is the right answer. Yes, C is the right answer. Credit risk. Right, you are right. Credit risk is the right answer. Yes, absolutely. No, not market risk. Default risk is credit risk. If it is default, see how easy this question for you. It is default risk is mentioned here. Okay, default is what? Default in credit. So credit risk, in other words, called default risk. Getting it or not? See, options or sometimes the terms used in the question make the question tough or easy for you. So you have to check the catchwords. Sometimes a tough question may be having its answer in its narrative itself. Okay, and if all other options are eliminatable and you can eliminate them, then it becomes a easy question. So it depends a lot on the options and also depends a lot on the catchwords of question to understand whether the question is easy or tough. And see, nowadays questions are being asked in such a way that they will understand, they will estimate that what depth you have over the concepts. So don't think that you will be only reading and memorizing the MCQs and you will be through. No, this is not a PO exam. This is a specialist officer exam, and a specialization in such portfolios are required. Okay, so let's, yes, transaction risk also a counterparty risk. Definitely transaction risk is a counterparty risk. Nagarjan, great, you are moving at a right track. I'm very happy. Those who are watching us on YouTube are requested kindly to subscribe us. We have just going to touch 2000 mark in subscription. So let's discuss the question number 8. Intrinsic or concentration risk are part of portfolio risk, market risk, interest rate risk, or X risk. Nagarjan has given the answer option number A. Any other answer? So I'm happy that Anil says option number A. Great in Zoom. Okay, great. I'm very happy that, okay, Mahesh says option number A. Great, great. Okay, okay. Yes, yes, portfolio risk. The right answer is portfolio risk. Yes. See, when this IBPS PO exam has started, I have not made any dedicated course for IBPS RRB. But many questions for different segments from even for market. Someone from my class was saying that even for marketing managers, some of our questions in our PDF were directly being put there. Okay, so this is the depth we are making questions here. So we seek your support to be, and your participation, your subscription to our channel, and your joining to the course, so that we could bring you more in-depth material. We are working hard for you, and even many bankers, experienced bankers, are working with us. So go ahead and join with us. The description link is there, and you can anytime start your preparation through app. Okay, so this is the intrinsic and concentration risk is about portfolio risk. What is that concentration risk mean? What is that concentration risk mean? Can anyone tell me?
Sir,
You can
Anil, sir.
unmute. Yes, tell me. Who
Anil.
is this?
Anil.
Anil.
Yes.
Yes, Anil, go ahead.
Concentration is means focusing or giving load to a particular industry or particular segment.
Okay. Okay. So yes, it is an exposure to a particular segment, right? Putting all your eggs into one basket, right? Putting all your eggs into one basket. If you have money, you could invest in various types of funds, but you have choose only equity and you have invested into particular company's stock. All your money was there in put in one stock, and when the share price of that company crumbles, all your money will be eroded. All your money will be wiped out, right? That is the concentration risk. So it is very much necessary for banks to diversify their investment, right? Okay, intrinsic risk means itself inside any portfolio. Okay, we will be discussing all that in our dedicated classes. We'll be discussing about all the risks. We have already covered credit risk completely, and the rest we will be discussing about market risk in our coming classes. I am running with some busy schedules, so but I will be making my time. Within next week, I will be completely free. I thought I will be free by this week, but there are few works I have to complete. So there are some disturbances in regular classes, but we are making it, trying to make it every alternative day. So don't worry, we'll be completing the course by by before before the examination is scheduled. Okay, don't worry. The risk arises from non-performance of trading partner. What it is called? Many of you have answered counterparty risk. Is there anyone having any other answer? Ruchak Mehrotra says it's D. Mahesh says it's counterparty risk. Binay says it's counterparty risk. Any answer from all of you? Any answer? Anyone having any other answer to this? Anyone having any other answer? Yes, definitely this is counterparty risk. When a trading partner fails to keep up his promise, it is a counterparty risk. Counterparty risk means the trading partner's risk. You enter into an agreement with your trading partner, but many a times the trading partner may not honor its own commitments. So that is the counterparty risk. That happens in open market operations. That option is available when you have a negotiation of bill of exchange, etc. Okay, bills negotiation, etc. Okay, the credit control committee should be headed by chairman, CEO, or ED, head of credit department, chief economist, GM, and above rank officer. Who heads the credit control committee? Who heads the credit control committee? Can anyone tell me? Yes, you said GM and above rank official Nagarjan Anil. Great guesswork. Great guesswork. Ragini D. It's a guesswork, I believe. It's a guesswork from all of you, I believe. You are relating it with banking ombudsman's rule, internal ombudsman rule, CCO rule. Yes, yes, Ragini. I get a sense. When you people guess, I can understand. Okay, Anil says yes, they are guessing it. Binay says B, head of credit department. Okay, A or C. You say A or C. Okay, okay, okay. So here the right answer is chairman, CEO, or ED. Right. Option number A is the right answer. Chairman, CEO, or ED. ED stands for executive director. Right. ED stands for executive director. Getting it? What is the risk rating factor for foreign banks operating in India? This is a catchy question. Look, we have in first question we have discussed that CAMELS stands for the risk rating, but here there is a second question related to the risk ratings of banks. Foreign banks operating in India. Foreign banks operating in India are rated with camel, calcs, CSCLs. There is S is added when we discuss sensitivity. Okay. Kindly mute. Someone has not. Someone has. Okay. Kindly mute it. Yes. Nagarjan says camel. S is not taken into consideration for foreign banks. As for your information, S stands for sensitivity. Okay. Anyone else having any other answer here? Anyone else is having any other answer here? Anyone else is having any other answer here? What is the risk factor for foreign banks operating in India? Okay, risk ratings through which foreign banks are assessed in India. Can anyone tell? Okay, let me answer it. This is CALCS, calcs. Okay, not camels, not camel. It is calcs. Okay, that is C for capital adequacy, again A for asset quality, L for liquidity. Okay, and C for compliance. Okay, no, not collateral, not collateral, not collateral. Okay, so let's move to the next question. Camel's rating for banks are in India are substituted by the camel's rating in India is now substituted. Okay, there is something else which is introduced on behalf of camels. Can anyone tell me what is that? Can anyone tell me? Can anyone tell me? In CALCS, we have discussed what is CALCS. I have missed to answer you what is S. Okay, S for systems. Okay, capital adequacy, asset quality, liquidity. C for compliance, and here S for systems and control. Okay, but in camels, S stands for sensitivity. Okay, so you are saying, Anil saying systemic review. No, this is not the right answer. Camel's rating in India is replaced by RBS, risk-based supervision. What is it? Risk-based supervision. Getting it? The right answer is risk-based supervision. Yes. Many of you saying A, but A is not the answer. Option number B is the right answer for question number 12. Getting it? Option number B is the right answer for question number 12. Okay. Question number 13 says, DAS is designed and implemented as a process encompassing both on-site examination and off-site surveillance of bank. I think those who are preparing for risk management must be preparing it. Supervisory review, many of you saying option number D, supervisory review. Risk management people, I think you have some preparation, as we have made fewer classes for risk management. So many classes are scheduled. We'll be having marathon classes from November onwards. Many of you saying option number D, supervisory review. Okay, now you all are wrong here. Abhinav Kumar has once said option number B. You are right, but Abhinav has almost responded with all the answers. That is option A, B, option D. He has given all the options as answer. So one stands right out of these three answers. Okay, so that's it. That's a great move, but this is not allowed in examination, right? So this is RBS. In RBS, there are two types of examination happens. One is on-site examination and second is off-site surveillance of banks. Okay, so you have to go deep if you are preparing for risk management, or else you can join us. We will be taking you through the course and with in-depth ideas. The DAS framework links the regulatory action to quantitative measures of performance, compliance, and solvency, such as CRAR, NPA levels, and profitability. Anil says option number D. Okay, Anil says earlier options are previous questions. So I'm sorry for that. I'm sorry for that. Okay. Okay. Not an issue. Not an issue, Abhinav. Yes. Anil says option number D in our Zoom session, and I'm yet to get an answer from YouTube viewers. B, PCA. Rochak Mehrotra says PCA. Nagarjan says prudential norms here. But actually, the right answer here is PCA. Those who have answered with PCA have done a great job. Okay, the prompt corrective action framework, yes, links with regulatory action to quantitative measures of performance, compliance, and solvency, such as CRAR, NPA level, and profitability. Getting it? Getting it? You have to, this is, if I would have given you a direct question about PCA, it would have been an easy question for you, but you need, this is not a top one, but you need to have understanding for that. Okay, all of you be knowing about PCA, but when such a clarification is given to it, when such a big clarification is given to it, what happens? What happens? You tend to have some ambiguity in your mind, right? चलो आगे बढ़ते हैं. ऑप्शन नाउ क्वेश्चन नंबर 15. What is ICAP? ICAP is a key element of the bank's governance framework in matters of capital adequacy assessment, bank's risk profile, quality of risk management process, etc. And here I stands for, I think you are getting the okay, option number B says internal. So what is the full form of ICAP? So what ICAP they have already defined in the question, right? So similarly things happen. Can anyone tell me? You can unmute yourself and tell me what is ICAP.
Sir, Anil this side.
Yes, Anil.
It's internal capital adequacy assessment process, maybe.
Yes. Internal capital adequacy and assessment process. It was introduced through which law, which act, or through which committee? Can anyone tell me here? Which committee it is introduced, when, or by which committee? Yes, Mahesh is internal, said internal in YouTube. Great. All others, you could have answered it. ICAP, you'll be knowing it. Yes, it is introduced under Basel norms, but not in Basel 3. It is introduced during Basel 2 norms. Okay? Getting it? Getting it? These are forward-looking and dynamic methods for determining the capital requirements and detecting weakness in the risk management process of the bank. These are forward-looking and dynamic methods for determining capital requirement and detecting weakness in the risk management process of the bank. Nagarjan says stress test. But there are 4 options. Anyone else can answer me? BCBS, right? Mahesh, you are right. Yes, Rochak, you have given right answer to the last question. Mahesh, also you have given the right answer to the previous question in YouTube. Okay. Yes, a stress test. Rochak says a stress test. Anyone else? Risk test, thematic test, systemic test. Yes, Avinav, you are right. It is stress test. Right. The right answer is stress test. Okay. So let's move to the question number 17. Internationally, banks use dash model for management of equity position risk. VAR, Altman Z score, CAR, RWA. Any answer? Any answer? Okay, D, risk weighted asset, you say. Okay. Anyone else? Okay. Binet Teller A, Altman Z score, yes. Okay, you all have given all the answers. Some of you are saying option number A, some saying B, some saying D, but no one has mentioned C. But C is not the right answer here. The right answer is value at risk. Okay, don't go with Altman Z score. This is related to risk, but here we are discussing about VAR, right? That is value at risk. Internationally, banks use this model for managing equity position risk. See, value at risk is a risk assessment tool that is used for portfolios. Okay, so when you are discussing, when in the question we have discussed about equity position, where you could find your equity position, you could find your equity position in your portfolio, right? So the right answer here will go directly with option number A. Okay, this is VAR. Mahesh, you are right. You are right. I'm so happy that you all are having clear concepts. Okay, and we'll be discussing all that in depth in our upcoming premium classes that is only be available with enrolled students in our dedicated app. There are various tools upon substitutes available for hedging of foreign exchange risk, like forward and option, future, money market instrument, all of the above. You understanding the question here? Yes, Anil, you say option number A. Various tools, that is substitutes substitutes available, and that is available for hedging of foreign exchange risk, like here all the options are right. Forward and option, future and option, yes. Future, money market instruments, all of the above. See, I have already told you, if there are four options, the possibility of every question being the right question, right answer is 25%. But when there is all of the above mentioned, the probability of that option being the right one is 33%. It's a general phenomena. Okay, but don't always go with all of the above. See, if you find two of the questions, two of the options are suitable for the answer, or suitable or right answer, you feel it right answer, you can take a calculative risk. Okay, so you are already preparing for risk management, and many of you are also have some questions on risk management in your professional knowledge part. So you should have some, should take some calculative risk when you want to qualify in these exams, right? So when all of the above there, you need to consider the option. If you find one of the answers is right, if you find option number A is right, but when you look into the option number D or E, which is the last option, if it mentions all of the above, it is advisable to you that you must consider all the options again, because the chance of this one being the right answer is more probable. Okay, and if it is none of the above, and if you find none of the options are suitable enough and the answer is there none of the above, you are requested, you are advised to check your answers again, because the probability of none of the above being the right answer is 20%. Okay, it is less. The average percentage is probability is 25%, whereas none of the above has a chance that it will be a right answer 20% of times, and all of the above will be the right answer at 33% of time. This is a general phenomena, not a rule. Okay, so you need to recheck when all of the above is there. You need to recheck your options. If you find one of the answer is right, then recheck whether all other options work, all of the other options go with you or not, go with the question or not. When none of the above is there, please recheck whether you are missing some of the options being the right answer or not. Getting it or not? Getting it or not? This should, this will help you a bit. Okay. Okay, but see, hard work has no substitute. You need to do hard work. You need to prepare hard. Okay, neither I nor anyone else can make you through the exam. I am here just to filter questions, materials, syllabus, videos, quiz, etc. for you. The rest lies on you and the rest is your dedication part. Getting it? Let's move to the question number 19. These reserves often serve as a cushion against unexpected losses, but they are less permanent in nature and cannot be considered as core capital. So, what is the right answer? Which one I am talking about? Revaluation reserve, tier 1 capital, secondary capital, subordinate capital. What I am talking about? What I am talking about? With this explanation, what I am talking about? Rochak, you said option number A. Nagarjan here in Zoom says option number A. Okay, revaluation reserves. Okay. Anyone having tier 1 capital? Mohesh, you say tier 1 capital. Good. Anyone else? Anil says tier 1 capital. B, option number B. But let me tell you all, the right answer is revaluation reserve. I have already given you the explanation. When there is an explanation, you are getting yourself confused. But see, you need to have preparation in this way. Remember, questions are going. I'm not saying that this is going to be asked in your exam, but questions of this type is going to be asked. Questions of this type is going to be asked. Okay, I think you will be having a clear idea how these questions are being asked, how these questions are nowadays being asked. Okay, let's move to the question number 20. Banks investment in all securities should be assigned a risk weight of dash percent of or market risk. Dash percentage for market risk. This is something about risk weighted assets. You say 1.5. Nagarjan, option number A. You are very fast to answer this. Is there anyone else? Sorry, it's D. Mahesh says D. Okay, Ragini says 1.5. Anil says option number A. Everybody is now following it. Option number A. Okay, Mahesh, you have said, sorry, it's D. I think it is you have answered it to the previous question, but in previous one, the first one followed. Abhinav says A. Ruchak says 2.4, but there is no such option called 2.4. I think he was meant to answer 2.5. Okay, great. Banks investment in all securities, including G-SECs, government securities, should be assigned a risk weight of 2.5% of or the market risk. Getting it? Okay, someone has disliked me on my video. Okay, I think he finds more beneficial videos somewhere else and he finds it complete nonsense. But whereas 3 has given a thumbs up. Don't worry about it. I will be getting more views because we are at a right track. We don't bother about it. Okay, so option number D is the right answer, 2.5. Okay, you all be getting this PDF link very soon after the class ends. And this is a total 20 questions we have covered. Rest we will be uploading it in our app, and we will be having few more sessions on risk management. We will be covering more quiz and more sessions, dedicated sessions. Okay, so any question, any doubt, anything else you want to share, we'll be there for a few minutes, 5 more minutes. Is anyone want to share anything, want to ask anything? You all are welcome. We'll be discussing it. Else we'll have the session ended. And okay, thank you, Nagarjan. Okay, thanks. Okay. So I don't find any question here. Any doubt you can ask me? Any doubts? Sir, can you have some class on market risk? Yes, market risk PDF is already prepared. I am not having time, and many of you have asked me to conduct a quiz session. Quiz is more participatory, and you gain more out of the quiz. Hence, I have made this quiz for you. Market risk is ready. We will have our next class on market risk that will be exclusively available in app. So don't worry about it. The next class is all scheduled. Don't worry. The PDF is almost ready. I have to recheck it once again. And once I check, I will be maybe day after tomorrow is the next class on credit risk, sorry, market risk. Market risk is a bit important. We'll be covering market risk in general. That will also be in-depth analysis of market risk. Yes. Okay, great. Anil says, which level is totally similar to Indian Bank question of last year? Thank you. Thanks for the compliment. And I'm okay. Abhinav here says, great content. Okay, thank you. This is the way we are preparing, and if it is in the right track, it is going to be helpful for you. That is a sigh of relief for me and a great sense of entitlement. I agree. Okay, thanks for the appreciation, and I want to be match exactly the question level. See, I will give you limited questions. I will be giving you limited syllabus. I will be giving you limited materials. But let me tell you that I will be covering 90% of the syllabus exactly. And the way we are working hard to make our syllabus more concentrated and less concise. Okay, it should not be lengthy enough because we all are working professionals. Neither you have time nor I have time to teach on nonsense to you. I am not here to teach anything nonsense, right? Moy says nice quiz. This is the difference. So the only factor is I am not here to teach you anything nonsense, or nor I will discuss anything which is not going to help you in your exam preparation. No bakwas. Okay, I don't even encourage people to participate. Okay, I was saying that someone has disliked. Now this like ratio has moved a bit, 6 likes. So this is how people find it useful. I am not bothered about like dislike ratio because this big YouTubers, they want their ratio to be high. I am not here for that one. I am here for dedicated class. See, whenever you find that this question is not up to mark, you people have appeared examinations before. I am not teaching anyone new here. I am not teaching anyone on experience. Many of credit people are new to this, but many of you are experienced and appeared examination before. You can rectify me, sir. This question which you have asked in this quiz is not useful. Such questions are not going to be asked. I want your participation. I want adverse comments so that I could rectify. I am not here to have my own monopoly and I will have a sense that I know everything, and so that I will make questions according to, though there are people, bankers who are helping us, but definitely if you have your voice, you can raise your voice. You can say, yes, this question is in the right track or this question is not. You can tell me that I want, that I will appreciate. Yes, I will modify it. But what will happen if I will apologize for my mistakes? Will I be penalized or will I be hanged? No, but my students will get benefited out of it. That is I want. Or else you can give me some questions in your free time. So this question I found, I have studied. This question I found valuable. Though this is a competitive exam, but you don't want your competitor to get the right answer. But by sharing your knowledge, you will be gaining it. Okay, you will be gaining it. Sir, your class related to LCBG is very useful. It is really cleared my concept. Thank you for that appreciation. Okay, thank you. So if I will continue this class, you will be praising me more and will have less content prepared. I will believe that I am all right and there is no need to rectify my materials. So with that note, I want to end the session. Thank you for being with me. Okay, if you have any doubt, you can ask me in the group. Even in our paid group, in free group, I am trying to clear all the doubts as far as possible. Even during my during daytime also, whenever I see messages, but I couldn't respond you a lot in daytime because I keep busy. But post 8 o'clock, I try to answer you. So I will request you to ask questions that are really, sir, what is the scope? Ask about branch banking options. Yes, they will be asking you few questions from branch banking. Okay, they will be asking you few questions. Whatever portfolio you are currently handling, you will be asked a question on that. So don't worry about it. Okay. So yes, you have a chance, you have a fair chance that you will be going through. Don't worry about it. So we are getting late. We have already covered 1 hour of our class. So let me end the session. We'll be discussing rest in our groups. Thank you. Thank you for being there. You will be getting the answers, the question PDF in our paid group very soon, and it will be also available on the app. Those who are having trouble in logging during login in app, kindly send me one-to-one messages. I am trying to close the queries very soon. It will be available for everyone, but it is now available for only for enrolled students, and there are few people who are having the free access. They can upgrade it. Okay, thank you, and good night all.